Hello everyone, this is Dr. Mihir Shah once again with another video. This is part 4 of last minute revision for the topics to be covered to easily pass a TYBMS SEM-VI student under the subject project management. So let us see which are the topics that you need to cover.
Okay. The question is given as calculate ARR from the following information. They have given you cost of investment, then they have given you profit after tax for 1, 2, 3, 4, 5 years, and they have given us that the estimated life is 5 years and the scrap value is 20,000. Now let us see how we solve this. Okay, so first thing we need to calculate the table. In table we'll just have years and we'll have to take all the profit after tax. So we have 5 years, 1, 2, 3, 4, 5. We need to note down all the profit after tax. So we have 30,000, 50,000, 70,000, 90,000, and 1,10,000. And the next thing is we need to find the total of PAT. So we add up all the values of PAT and we get our total value, which is 3,50,000. That is step number 1. We need to get the total profit after tax the value. Now next, we need to first find average profit after tax because that's the numerator in our main formula. The formula is total PAT upon number of years. We have already found total PAT, which is 3,50,000. Number of years are 5, so it will be 3,50,000 divided by 5, which comes to 70,000 rupees. So our average PAT is 70,000. Next, we need to find average investment. Formula is original investment minus scrap value divided by 2 plus working capital plus scrap value. The original investment is 5,20,000, that's the cost of investment. Scrap value is 20,000, there is no working capital given in the sum. So when you substitute, this is how it should look. 5,20,000 minus 20 upon 2, whatever answer you will get plus 0 plus 20,000, that is the scrap value. Okay, so once you minus, divide and you add, the value that you all should get is 2,70,000 rupees. That's the average investment. We found the average PAT, we found the average investment. Now we directly apply to the final formula, that is ARR ka formula. ARR is nothing but average PAT divided by average investment into 100. So that will be 70,000 upon 2,70,000 into 100. Our final value should be 25.926%. This is how you have to solve the sum based on ARR. Very simple topic. You just have to take the average profit after tax, average investment, divide into 100. That's your ARR. Okay, I hope everyone have understood. You just need to note down those formulas and keep it, and then just substitute into the values and you will get your final answer. Mansi Industry Limited has an investment proper of 40 lakhs. The expected cash inflow is under. So the initial cost or the initial investment is of 40 lakhs. That is cash outflow. The expected cash inflows are given 7 lakhs, 7, 8, 8, 9, 9, 10, 10 and 8 and 6. So 10 years ka cash inflows are given. The question says that calculate IRR with the help of 10% discounting factor and 15% discounting factor. So there are two different types of PV factors that are given to you. So we have to find twice NPV, one with the 10% PV factor and the other one with 15% PV factor. So now let us see how to solve such kind of sum. Okay, I will get note on the question in the corner. We'll have years, we'll have the cash inflows. We'll have PV factor at 10%, we need to find PV. Then again we'll have PV at 15% and we'll have to again find the PV. Okay, so very simple. 10 years are given, so under the year column we noted down all the numbers up to 10. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 years. Cash inflow may we'll note down all the cash inflows which are given to us. So it's 7, 7, 8, 8, 9, 9, 10, 10, 8 and 6. Okay, so we have 7 lakhs, 8 lakhs, 9 lakhs, 10 lakhs, 8 lakhs and lastly 6 lakhs. Now PV factor at 10%. Again that is already given to us for all the 10 years. So we'll just have to note it down. So it will be 0.909, 0.826, 0.751, 0.683, 0.621 and so on. So we just have to note down, copy it from the question into our format. Now in order to get a PV, it's very simple. It will be cash inflow multiply by PV factor and whatever answer we'll get is nothing but a present value. So 7 lakh into 0.909, again 7 lakh into 0.826, 8 lakhs into 0.751, 8 lakhs into 0.683, 9 lakh into 0.621, and so on. So you have to multiply cash inflow with the PV factor, and the product what we'll get is nothing but a present value. So let's multiply them, and once you multiply, we will get a present value as follows. Okay, so see that you all can calculate it. 7 lakh into 0.909, that will give you 6 lakhs 36,300. Again, when you multiply 7 lakhs with 0.826, and you will get the value as 5 lakh 78,200, and so on. So step number 1, we noted down all the cash inflows. Step number 2, PV factor. Step 3, we multiplied and we got the present value at the rate of 10%. Now the same thing we'll have to repeat for PV factor at 15%. So we'll note down PV factor of 15% ka all the rates. So that is 0.870, 0.756, 0.658, 0.572, and so on. Now again, in order to find the PV, very simple. Cash inflow multiply by PVF at 15%. So it will be 7 lakhs into 0.870, again 7 lakhs into 0.756, and so on. Once you multiply, we will get the following values as a present value at the rate of 15%. Okay, this is the very first step that we need to fill up the table. We noted on the cash inflow, we noted down the PV factors at the rate of 10% and 15, multiplied them with the cash inflow, and we got a present value. Now let us total the present value, because for the formula of NPV I need total inflow. So when you add up the first at the 10%, the total value that you should have got was 49 lakh 79,000. And same way for the 15%, the PV should have been 40 lakh 36,700. Okay. Once we get the total, now let us find the net present value, also known as NPV. So let us find for the NPV1. So NPV1 ka formula will be PV of inflow, which is 49 lakh 79,000, minus PV of outflow. Outflow is already given in a question, that was 40 lakhs. So 4979 minus 40 lakh, you will get NPV of 9 lakh 79,000. Similarly, we'll have to find the second NPV for the second PV factor. Formula remains same. We'll have the inflow, which is 40 lakh 36,700, and outflow is again 40 lakhs. So when you subtract, our NPV2 will be 36,700. Now remember, in order to substitute the value into the formula, we need four amounts. We need lower PV factor, which is 10, higher PV factor, which is 15, and we need two NPV. One is 9,79,000 and the other one is 36,700. So these are the four values that you require. Now let us see how we can substitute this in our formula. Okay. First, we'll just note down the NPV that we got. Okay, one was 9,79,000, the other one was 36,700. Okay, R1 is the lower, the first PV factor, so we'll have 10% is the first. R2 is the second one, that is at 15. NPV1 is 9,79,000, NPV2 is 36,700. Based on these four values, we will substitute into the formula, and this is how it should look after substitution. IRR is equal to 10 plus 9,79,000 upon 9,79,000 minus 36,700 into 15 minus 10. Okay, so 15 minus 10 will give you 5, and we'll have to minus 9,79,000 minus 36,700. So when you do the minusing part, this is how it should look. It will be 10 upon 10 plus 9,79,000 upon 9,42,300 into 5. Now we will first solve this part. So we'll first divide 979 divided by 94,2300 into 5. Whatever answer we'll get, we need to add it to 10. So it will be 10 plus 5.19. When you add up your total, your final answer will come up to be 15.19%. That's our final IRR, that is the internal rate of return. So the project can earn you a return of up to 15.19%. This is how you all had to solve the sum based on IRR. Very simple, just have to apply into the formula, get two NPVs and get those values and substitute the value into the formula, and you will get the answer. Okay, the first question reads out as
Prepare an amortization schedule from the following information, assuming that the amount payable is an equated annual installment. Now that's the very first time. Always read what they're asking us to find. There can be two variations in this. One, equated annual installment. Second, equated principal. Okay. So based on that, we'll have to solve this. This is based on equated annual installment, meaning the installments will remain same for all the years. The borrowed amount is 2,40,000. The annuity rate of at the rate of 12% for 6 years. So the sum is based on 6 years is 4.111. The compound annual rate of interest is 12% and the repayment period is 6 years. Okay. So now let us see how to solve the sum. So first of all, since it is a 6 year sum, I will make here 6 rows. So we'll have year 1, 2, 3, 4, 5, 6. Okay, that is the very first thing. Now to find equated annual installment, we have to first use one formula. Okay, I write it here. Equated annual installment is equal to the loan amount upon the annuity rate. Now in this sum, the loan amount was 2,40,000 and the annuity rate is given as 4.111. Now for those, suppose now in this sum, so at least they are giving you the annuity rate. If not, how to calculate that? Look at this very, very carefully, okay? Since the rate of interest in the sum was 12%, so now see how you have to go for it, okay? See, we'll get the same value. Here they are giving you, but what if they wouldn't have given us? It would have been 1 divide, since it's 12%, it will be 1 divided by 112%. That's my first year ka PV factor. Okay, you can say 1 for first year ka PV factor. I will click on the memory plus. So I recorded on my memory. That's my first year ka. 6 years are there. Into again memory equal to, that's my second year ka. We press another equal to sign. That's my third year, fourth year, fifth year, and sixth year. I have taken all the 6 year ka PV factor and now we are adding it up. So memory recall, I will get the 6 year ka PV rate at the rate of 12%. So 4.111, the rate which is already given to us in this question. So that is how you need to find the the annuity rate. So now 2,40,000 divided by 4.111, we will get the answer as 58,380. So that is 58,380. Okay. So now let us see how to solve the sum. So I'll write here, this is my loan amortization schedule. The first column will be years. This will be, next will be principal amount. In the bracket I'll write OP, that's opening balance. Next will be interest. Now in this case it is 12%. Next will be the principal installment. In the bracket I'm writing installment. Next will be the loan installment. And last will be principal, bracket mein closing. So we have opening, interest, principal, amount of installment paid, loan installment, and principal. 6 years are there. 1, 2, 3, 4, 5, and 6. Now this was the sum where they had asked us to find the the entire schedule as per equated annual installment, meaning a loan installment, equated annual installment will remain the same for all the 6 years. So 58,380 will remain for all the 6 years. So if they give you they want you to find with the equated annual installment, meaning annual installment will remain the same for all the years. Okay, so that is 5,8,380 for all the 6 years. Okay, now your opening balance of your loan was 2,40,000. Okay, now chalo, with the help of calculation, now we'll see how we can go ahead. So 2,40,000 into 12%, we'll get the interest. So always interest is on the opening balance, 28,800. Now you're paying an installment of 58,380, out of which 28,800 is the installment amount, or the interest amount. So what will be the principal in this 58,800? So we are subtracting it. So we get the value as 29,580. So loan installment minus interest will give you the principal. Now opening balance minus the principal installment will give you the closing. So 2,40,000 minus 29,580, we will get the value as 2,10,420. Okay, so last year ka closing will become the next year ka opening. So 210,420. Of that I will take 12% interest. So I will get the value as 25,250. Now this 25,250 minus 58,380 will give you my principal installment, that is 33,130. I subtract these two, I'll get my closing balance 177,290. Again last will become current year, 177,290. 177,290 into 12%. So I will get the interest amount as 21275. I subtract these two, I get the principal installment 37,105. When I subtract the opening with the 37, I'll get the closing 140,185. Last year will become this year's opening 140,185. Okay, so 140,185 into 12%, the interest comes to 168,222. Subtract it, I will get 41,558. Opening minus installment, I'll get the closing balance as 98,627. Same thing comes here, 98,627. So 98,627 into 12% will give you 11,835. When I subtract, I will get 46,545. When I minus the opening with the principal, I will get 52,082. So last year will become this year 52,820. Now this is the most important part. Okay, the last principal amount is 52. So the same principal, because see, at the end I need the answer to be nil, because this is the last year we're paying the entire loan. So my principal amount will be 52,082 only, because opening minus the principal should give you 0. So now the difference between these two, 58,380 and 52,082, will be your last interest amount, which comes to 6,298. Okay, so with that, okay, this is how you all had to solve the sum. Now this is based on when they are giving you equated loan installment or equated installment based. This was sum number 1. Now in the same way, let us look at the next sum. The second question reads out as: prepare an amortization schedule from the following information, assuming that the amount payable is based on equal principal method. Meaning now here the principal installment should be equal. Amount borrowed is 9 lakhs. Repayment period is only 3 years, so it will be 3 years, and compound annual interest is 12%. So again, what I'll do here is I'll make the 3 years ka. So year 1, year 2 and year 3. Okay, we have years, the columns remain same. We'll have years. I'll have the principal amount, that will be the opening balance. I'll have interest is at again 12%. I'll have principal installment. I'll have loan installment, and I will have lastly the closing balance of the principal. 3 years are given, 1, 2, 3. Now here they haven't asked me that in this sum is not based on equal loan installments, so I don't have to use this formula. Opening balance is 9 lakhs. Now 9 lakh in equal installment in 3. So in 3 years, if I divide, my equal principal installment will be, it will be 3 lakhs. So I will have to take 3 lakhs each.
So I will take principal installments are 3 lakh and 3 lakhs. So here in the sum, the principal is remaining the same. Okay. So now it is very simple. On 9 lakhs, if I take 12% interest, I will get the interest as 1,08,000. So interest plus principal will be the loan installment. So it will be 4,08,000. Now opening minus the principal installment will give you closing, which is 6 lakh. Last year ka closing will become this year ka opening. 6 lakhs ka 12% is 72,000. 3 lakh plus 72,000 is 3 lakh 72,000. 6 lakhs minus 3 lakhs is 3 lakh. 3 lakh is last year, will become opening of this year. On 3 lakh we'll take 12%, I'll get 36,000. 36 plus 3 lakh is 3 lakh 36,000. At the end, opening minus the principal will give you nil. The answer should be nil. Okay, so this was the second type of variation. So one where they asked you to find based on equal installment, equated annual installment, and here they told you the principal should be equal. Okay, so these are the first two type of sum that we are done based on loan amortization. I'll just note down the heading here. This is also loan amortization schedule. Okay, now the third question reads as, the blue diamond furnishes you with the following details. The term loan required is 5,000 lakhs. Interest rate is 12%. Tenure of the loan is 5 years, repayable with installment and interest at the end of each year. Okay, and they are giving you again, you need to calculate, you need to solve as per the amortization schedule, assuming that the amount payable is an equated annual installment. Again, equated annual installment, so we will have to find the equated annual value now here. Now the rate of interest is 12%. Okay, and the year is 5. Okay, so what we'll do here is, first of all, we need, first I'll just note down this table here. So I'll make this year. This is the principal amount opening. This will be interest at the rate of 12%. This is principal installment. This is loan installment, and this is the principal closing value. Okay, I just noted down that. The sum is based on 5 years. So I'll make your 5 years card data. So this is my year 1, year 2, the third year, fourth year, and fifth year. Okay, I'll just note down the years 1, 2, 3, 4, 5. Now we need to find equated annual installment or the loan installment value. The formula was loan amount divided by the annuity rate. The loan amount in this question is 5,000 lakhs, so I'll write it as 5,000 divided by, now how to calculate this, again on the calculator. 1 divided by 112%, that's my first year ka. I press into and equal to, that's my second year ka, equal to third year, fourth year, and fifth year. Then I press the memory recall. I will get the total value as 3.6047. Okay, so 5,000 divided by 3.6047, I will get the equated value of 1387 138 cents. I'll take it as 1387 here now. So loan installment will be first I'll just write it here. This is 1387. Okay, so let us start with the loan amortization schedule. Okay, the opening balance is 5,000. Now the loan installment is 1387, so I'll write 1387 in all the cases.
ठीक है, चलो तो we'll start now. First 5000 into 12% is 600. Thereafter 1387 minus 600 will give you the installment value 787. So 5000 minus 787, the value will come to 4213. Last year will become, this is opening 4213 into 12% will give you 505. Now this 1387 minus 505 will give you the balance of 882 minus 4213 will give you the closing value of 3331. Last year will become this year's opening. On that, if I take 12%, I will get 399. So I'll take that as 399. Now 3331 minus 399 will give you, no, it's 1387 minus 399 will give you the value of 988. This minus 3331 will give you the closing value of 2343. Last year will become this year's opening 2343. On that I will take 12% interest, so I'll get it as 281. Again 1387 minus 281, the balance will be 1106. This amount minus 2343 will give you 1237. Last year will become this year's opening 1237. Now at the end I want it to be nil, so my principal will be 1237 minus 1387, that will be the value of interest, which comes to 150. Okay, that is how we need to get the value of, or to solve the loan amortization schedule. Okay, so now let us do one last type of sum under amortization schedule. The question reads out as: Falcon Limited is furnishing you with the following detail. The term loan required is 4,000 lakhs. Rate of interest is 15%. The tenure of the loan is 8 years, repayable with the installment at the end of each year. And principal amount is payable in equal installment of 500 lakhs each year. So now this is based on equal principal value. Okay. So I'll give the heading as loan amortization schedule. I'll have years, principal opening balance, interest at the rate of 15%. I will have principal installment, I'll have loan installment, and I'll principal closing. Now this is 8 years ka sum, so first let us make 8 years ka rows. So that's year 1, 2, 3, 4, 5, 6, 7 and 8. Okay, 1, 2, 3, 4, 5, 6, 7 and 8 years. The opening balance was 4,000 lakhs, so 4,000. Here the principal amount will remain the same. They said principal installment is 500 for each year, so 500 every year. So we just noted on 500 every year. So 4,000, on 4,000 we'll have to take 15%, which comes to 600. 6 plus 5 is 1100. 4,000 minus 500 is 3,500. Last year will become this year's opening. On 3,500 we will take the interest. The interest is 525. Okay, 3,500 into 15%, 525 plus 500 will give you 1025, and closing will become 3,000. 3,000 comes down. On 3,000 we will charge 15% interest, which is 450, plus 500 will become 950. Okay, and this will become 2,500. 2,500 comes down. Now on this 2,500 we'll charge 15%, which is 375. This will become 875. This will become 2,000. 2,000 comes down. On 2,000 we will charge 15%, which is 300. So 3 plus 5 is 800, and this will become 1,500. Comes down as 15. 1,500 into 15% is 225. This will become 725. and this will become 1000. 1000 comes down. Okay, 1000 comes down. On 1000, 15% is 150. Okay, this will become 650. Okay, this will become 500. Last we have 500. On 500, 15% is 75. This will become 575. 500 minus 500 will become nil.